Assalamualaikum and good days to our respected lecturer, Associate Professor Dr. Muhammad Faizal Basri and fellow classmates. Today we are here to present our group assignment for the Financial Management course, which is FIN420. The title of our presentation is Financial Position and Performance of Company. In this presentation, we analyze and compare the financial performance of 5 major retail-related companies in Malaysia. The companies we have choose are, the first one is Minus Holding Berhad, second is Mr. DIY Group Berhad, third is 7-Eleven Malaysia Holding Berhad, fourth is QL Resources Berhad, last one is Berjaya Food Berhad. We have evaluated their financial position from 2021 until 2023. Focusing on the following 5 key financial ratio categories, which is liquidity ratio, leverage ratio, activity ratio, profitability ratio, and last but not least, market or equity ratio. Our main objective is identify the financial strength, weakness, and overall performance of each company, as well as to assess how they stand competitively within the same industry. We hope this presentation will offer valuable insights into the financial health and competitiveness of the selected companies in the Malaysia retail sector. Now let me introduce our team member. I am Ahmad Shafiq, and together with my teammates Muhammad Shahir, Muhammad Zuhairi, Wan Nur Haifa, and Nur Shamimi. Without further delay, let's begin within the first company, which is Minus Holding Berhad. Okay, for the first company, which is Minus Holding Berhad. Minus was originally founded as a Vincent store, Saint Berhad, in 1996, and later rebranded to Minus in 2016. It is listed on the main market of Bursa Malaysia since 25th June 2018 under the stock code Minus. The parent company is led by Mr. Dang Tai Lup, who is not only the major shareholder but also the founder. The company is closely tied to his family and related corporate entities. The core business of Minus include operating convenience store and producing fresh food under well-known brands such as Minus, Chumat, a Korean convenience store concept, and WH Smith, a travel retail brand. Minus has also received recognitions for its effort in maintaining high product standards. It won the Asian Halal Brand Awards in 2021, earning the title of Best Convenient Retail for its commitment to quality halal product. In terms of financial performance, between 2021 until 2023, the company show a growth in profit from RM 4.2 million to RM 14.5 million. However, there are a slight dip in performance with profit dropping by RM 2.6 million to RM 8.5 million, mainly due to COVID-19 lockdowns and increased operational costs like new store setup expenses. Despite the challenge, Minus remain profitable and continue to expand its store network, providing its resilience in the competitive retail industry.
Background of Mr. DIY Group Malaysia Berhad. Mr. DIY started open one small home hardware store on Jalan Tuanku Abdul Rahman in July 2005. If we can see at the time, it's just a normal home hardware store like any another store, but who knows it will be among the advanced hardware store in Malaysia. The vision of Mr. DIY store is to be the largest home improvement retail in Malaysia and Brunei, while the mission is to create a global recognized retail to offer diverse retail experience catering from different customer segments. To maintain wide variety, good quality and value for money, holding true of our company mottos, always low price. Starting with only hardware in the store, now in each store, Mr. DIY provide a broad range over 60,600 items in 10 categories: hardware, household, electrical, furnishing, car accessory, stationery and sport, toy, gift, computer and mobile accessory, and jewelry and cosmetic. The majority of Mr. DIY store are about 10,000 square feet in size, allowing for pleasant and healthy family shopping experience. Every year, Mr. DIY serves more than 80 million customers through Malaysia and Brunei as well as via our shop online. Next, the award received by Mr. DIY was Asia Pacific Enterprise Award 2023, Corporate Excellence category for outstanding performance in organization, culture, innovation and growth. Financial performance Mr. DIY 2021 to 2023, profit up RM 47.8 million to RM 259.1 million, slightly 10.4 million to 68.4 million is because of pandemic impact and cost pressure, but still profitable and resilient through the period.
Okay, now I want to talk about 7-Eleven Malaysia Holding Berhad background. It's founded 7 Convenience Berhad in 1984, and it is listing on Bursa Malaysia on 30 May 2014. And the parent company is home to SAI, major shareholder, and Berjaya Corporation Berhad. And the core business activity is operators convenience store selling food, beverage, groceries and service like bill payment, mobile reload and touch and go. And it's also own Carry Pharmacy and fresh food offering. And the award of 7-Eleven is Asia Pacific Enterprise Award in 2023, Corporate Excellence category for outstanding performance in organizational culture, innovation and growth. And the financial performance of 7-Eleven from 2021 to 2023 is profit up from 47.8 million ringgit to 256.1 million, and slight dip RM 10.4 million to RM 68.4 million because of pandemic impact and cost pressure, and still profitable and resilient throughout the period.
Assalamualaikum. My name is Nurhaifa binti Wan Hanafi. Today I would like to present about the background of QL Resources Berhad. QL Resources Berhad was founded on 24 March 1987 as QL Resources Sdn Berhad. It was listed on Bursa Malaysia on 30 March 2000 under the stock code QL7084. The company was established by Dr. Chia Song Kun and his family, who remained the major shareholder and continue to lead the business. QL operates a fully integrated agri-food business. Its main activity include marine product manufacturing, livestock farming, palm oil and clean energy, biomass production, retail operations through Family Mart convenience store, offering fresh food and daily groceries. In 2023, QL was honored with the each billion ringgit club award for the highest growth in profit after tax over 3 years, reflecting its strong financial performance and commitments to a sustainable business model. QL Resources demonstrate consistent resilience and profitability. Net profit increased from 311.9 million ringgit in 2021 to 346.8 million ringgit in 2023. In financial year 2022, there was a temporary dip profit to 217.3 million ringgit, primarily due to pandemic-related challenges and rising costs. Despite the dip, the company remained profitable and shows strong recovery by 2023.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Syamimi binti Omar. I will present the background of Berjaya Food Berhad. Berjaya Food Berhad, also known as B Food, was founded on the 21st of October 2009 and was listed on Bursa Malaysia on the 8th of March 2011 under the stock code B Food 5196. The company is a subsidiary of Berjaya Corporation Berhad, and its core business activities focus on food and beverage retail through popular brands such as Starbucks Malaysia, Kenny Rogers Roasters, and lastly Jollibee in Singapore. One of the company's notable achievements is Starbucks Malaysia winning the Putra Brand Award as gold winner in the beverage retail category for 3 consecutive years, from 2020 to 2022. In terms of financial performance between 2021 and 2023, B-Food recorded an increase in profit from 45.7 million ringgit to 122.7 million ringgit, despite experiencing a slight dip of 21.6 million ringgit, bringing profit down to 101.1 million ringgit due to inflation and foreign exchange margin compression. B-Food has remained profitable and resilient through the period.
First of all, the current ratio is used to measure a company's ability to pay short-term liability using its current asset. It reflects overall short-term financial health and the ability to settle obligations as they become due. Starting with Mr. DIY, this company consistently showed the strongest liquidity among the group, with the current ratio above 2 across all year, specifically around 2.0 in 2021, increasing to above 2.2 in 2022 and reaching nearly 2.4 in 2023. This indicator an excellent capacity to pay short-term debts comfortably without pressure. QL Resources maintains a stable and healthy liquidity ratio, with current ratio above 1.3, although there is a slight downtrend. This still suggests that the company can manage its short-term liability efficiently. 7-Eleven show a positive improvement over the year, increasing its current ratio and successfully crossing the safe level of 1.0 in 2023. This suggests better financial strength in the short terms and improved ability to handle immediately financial obligation. For minors, the current ratio are fluctuating and mostly below 1. This show weak liquidity and higher risk in covering short-term debt, which may expose the company to financial difficulties in unexpected obligation. Berjaya Food record the poorest liquidity performance, with current ratio consistently below 0.5. These indicators are seriously challenged in covering short-term debt and signals that the company relies heavily on inventory or other financial sources to meet its short-term need. In conclusion, Mr. DIY leads in the terms of short-term financial health, followed by QL Resources and 7-Eleven, which both show acceptance current ratio. Minus and Berjaya Food, however, remain in a weak liquidity position and face high financial risks. Next is the quick ratio. Quick ratio is used to measure a company's ability to pay short-term liability using liquid asset without relying on inventory. Starting with QL Resources, this company showed the strongest performance with a quick ratio of around 0.9 in 2021 and 2022, slightly dropping to 0.75 in 2023. This reflects a healthy level of liquidity even without depending on inventory. For 7-Eleven, its performance improved from 0.36 in 2021 to 0.84 in 2023. This indicates a significant improvement in its ability to meet short-term liquidity using only liquid asset. Mr. DIY was at a moderate level. Its quick ratio declined in 2022, but recovery to 0.54 in 2023. This shows fairly satisfactory short-term liquidity, although still below the ideal benchmark. From my news, performance was rather weak across all year, with a quick ratio below 0.52. This suggests that the company may face difficulties paying immediately debts without selling inventory. Berjaya Food consistently record the lowest quick ratio between 0.13 and 0.31. This reflects very poor liquidity and higher reliance on inventory to cover short-term liability. In conclusion, QL Resources and 7-Eleven show the best quick ratio position. Mr. Dewey was moderate, while Mr. My News and Berjaya Food remain weak in terms liquidity.
Next is leverage ratio. First, debt to ratio. QL Resources maintain the healthiest capital structure with the lowest and stable debt to equity ratio, around 83%, indicating balanced use of debt and equity and lowest financial risk. Mr. DIY showed a declining trend from 135% in 2021 to 103% in 2023, suggesting improvement in managing in debt level and reducing financial risk over time. My News have high ratio peaking at 182% in 2022 and slightly reduced to 167.90% in 2023. This indicated a high reliance on debt, posing moderate financial risk. Berjaya Food maintained very high ratio above 175%, ending at 196.54% in 2023. This indicated aggressive use of debt, which can be risky if earnings fluctuate. 7-Eleven have extreme high debt to equity ratio to decline from 1,142.97% in 2021 to 608.45% in 2023. Despite the drop, the level of leverage is still very risky and indicated a highly debt-dependent capital structure. Company with the lowest ratio like QL Resources and Mr. DIY are financially safe, while the 7E and Berjaya Food carry high financial risk due to the heavy reliance on debt. Next, the time interest earned. Mr. DIY constantly show the strongest ability to cover interest expenses, with TIE increasing from 90.67 to 10.69 in 2023, indicating very strong financial stability and low risk of default. QL Resources also maintains solid interest coverage with value ranging from 6.21 to 7.97, showing reliable earning to pay off interest costs. Berjaya Food improved significantly from 2.50 in 2021 to 7.08 in 2022, then slightly declined to 5.16 in 2023, but still show good capacity to meet interest obligation. 7-Eleven have weak interest coverage, although it improved to 2.14 in 2022. It dropped sharply to 0.33 in 2023, suggesting a risky position and limited ability to pay interest. MyNews have negative TIE across all 3 years from negative 8.38 to negative 0.65. This means the company is making operating losses and cannot cover interest expenses, posing serious financial. High time interest earned is indicated safer company in terms of debt repayment. Mr. DIY and QL Resources are safer while MyNews is in critical financial distress.
Okay, now I want to present about average collection period for Mr. DIY, Berjaya Food, 7-Eleven, MyNews and QL Resource. Okay, for Mr. DIY has a shortest and most efficient collection period, improving from 14.97 days in 2021 to just 8.81 days in 2023, showing its customer payment is very quickly. And for Berjaya Food also demonstrates strong collection efficiency, especially in 2023 with just 10.34 days, despite on spike in 2022. For 7-Eleven show fluctuations with the collection period rising to 21.07 days in 2022, but improving to 16.16 days in 2023. It still maintains relatively quick collection. So for MyNews, significantly improved from 34.06 days in 2021 to 15.81 days in 2023, which is a positive sign of better receivable management. And the QL Resource consistently has the longest collection period over 35 days, which may indicate slower customer payment or more lenient credit term, potentially affecting cash flow. Shorter collection period are preferred as they improve cash flow, and Mr. DIY lead in efficiently, while QL Resource show room for improvement. Okay, next is about total asset turnover for Mr. DIY, 7-Eleven, MyNews, QL Resource and Berjaya Food. So Mr. DIY show strong stable asset efficiency, maintaining high turnover between 1.20 and 1.25 times, meaning it's effectively use its asset to generate sales. And for 7-Eleven had the highest ratio in 2022, that's 1.41, but dropped to 1.10 in 2023, still showing good asset usage, through with a slight decline in efficiency. And next is MyNews improved significantly from 0.79 in 2021 to 1.15 in 2023, reflecting better utilization of asset over time. For QL Resource shows steady improvement, increasing from 0.89 in 2021 to 1.12 in 2023, indicating growing efficiency in asset use. And Berjaya Food has the lowest ratio across all 3 years, below 0.8, and suggesting weak efficiency in using asset to generate revenue. And the highest turnover indicates better use of asset to generate revenue. And Mr. DIY and My News are the top performer, while Berjaya Food lags behind.
Okay, now let's look at how efficiently each company generates profit from its operation. Mr. DIY consistently showed the highest and most stable operating profit margin, staying above 16% over the years and reaching 70.28% in 2023. This reflects strong cost control and high operational efficiency. In 2022, Berjaya Food had the highest margin among all companies at 18.84%, though it dropped to 13.33% in 2023. Despite the decline, it still reflects healthy profitability. QL Resources maintain moderate and stable margin. It dipped to 6.47% in 2022, likely due to rising costs, but recovered to 8.10% in 2023. This shows the company has reasonable operating efficiency. 7-Eleven's margin are very low and decline, ending at just 0.77% in 2023. This indicates that the company is earning very little profit from its operation. My News record negative operating margin throughout the period from negative 13.55% in 2021 to negative 1% in 2023. This shows that the company has been operating at a loss, although the losses have gradually decreased. So for the summary, top performers is Mr. DIY and Berjaya Food. Both show strong profitability and efficiency, and the lowest performance is My News, still in a loss-making position but showing sign of improvement. Thank you. Okay, now we continue to return on assets, ROA. Return on assets, ROA, measure how efficiently a company uses its asset to generate profit. A higher ROA means better profitability per unit of assets. Mr. DIY consistently record the highest ROA, ranging between 15% and 16%. This shows excellent efficiency in using its asset to generate profit. Berjaya Food shows strong improvement, increasing from 3.88% in 2021 to 9.17% in 2022 and maintaining a solid 6.99% in 2023. This reflects good asset utilization and growing profitability. QL Resources maintains steady ROA performance, ranging from 4.75% to 6.85%. This indicates the consistent and efficient use of its assets over the years. 7-Eleven's ROA was relatively weak, peaking at 3.15% in 2022, but turning negative at negative 0.57% in 2023. This suggests poor profitability and inefficiency in assets usage. especially in the most recent year. MyNews record negative ROA for all 3 years. Although the losses are gradually decreasing, this means the company is still unable to generate returns from its assets. So for the summary, top performance is Mr. DIY, highly efficient in generating profit from assets, and the weakest is MyNews and 7-Eleven, showing negative or poor returns, indicating inefficient asset usage.
Next, I will explain the market price section, where we look at important financial indicators that reflect market perception and investor confidence. First, let's take a look at the dividend payout ratio of this company. First is Mr. DIY. Mr. DIY shows a consistently high and stable dividend payout ranging from 40.15% to 54%. Indicating a strong commitment to rewarding shareholders. Next is Berjaya Food Berhad. Berjaya Food Berhad recorded a negative payout in 2021 due to losses, but significantly improved in 2022 with a payout of 64.94% and maintained a high 57.82% in 2023. It's reflecting strong return to shareholders. Next, we move to 7-Eleven. 7-Eleven gradually reduced its dividend payout from 40.71% in 2021 to 22.89% in 2023, possibly to conserve cash because of weaker financial performance. Next, we move to QL Resources. QL Resources paid steady but modest dividends, with the payout ratio declining from 34.62% in 2021 to 25% in 2023. It's showing a more conservative approach to retaining earnings. Lastly is MyNews. MyNews only started paying dividend in 2023 with a payout of 32.89%. After 2 years without any dividend payments, likely indicating a recovery from previous losses. Overall, a higher dividend payout means more profit is returned to shareholders. Among this company, Mr. DIY and Berjaya Food Berhad are considered the most shareholder-friendly, while QL Resources and 7-Eleven appear more cautious. Next, I will explain the price-earning ratio, which is another important indicator of market perception. For MyNews, the PE ratio increased from 0.15 in 2021 to 0.36 in 2023. This shows an improvement in investor confidence, although the market valuation is still low. Next is for Mr. DIY. Mr. DIY had the highest PE ratio among these companies in 2022 at 0.40. However, this dropped to 0.24 in 2023, which may signal lower investor expectations or slower profit growth. Now, let's move to QL Resources. QL Resources maintain a fairly stable PE ratio ranging between 0.28 and 0.37, indicating consistent market perception of its earnings. Next is 7-Eleven. 7-Eleven show a declining PE trend, falling to just 0.08 in 2023. This may reflect weak profitability or reduced investor confidence. Lastly is Berjaya Food Berhad. Berjaya Food Berhad recorded a negative PE ratio in 2021 due to losses, although it turned positive in 2022 and 2023. The PE ratios remain low at 0.12 and 0.10. It must be suggesting modest investor valuation. Overall, all these companies have low PE ratios, which suggests that might be undervalue of the investor experts, weaker profitability going forward. That's all from me. Thank you.
Now, I want to conclude about the 5 companies that we study. Mr. DIY emerged as the strongest performance with consistent liquidity, high profitability, and effective debt management, making it financially resilient and attractive to the investor. MyNews faced the most significant financial challenges and ongoing liquidity issue and negative profitability despite some sign of recovery in 2023. 7-Eleven and Berjaya Food had mixed performance with improvements in some area but challenges in liquidity and market valuation, highlighting the needs for careful financial planning. QL Resources also show strong fundamental in asset turnover and return on asset, reflecting efficient operations through liquidity slightly weakened in 2023. That's all our presentation about the financial position and performance of company. Thank you.